Peter? Okay, so for today, we're going to continue our discussion on computing some measures using these financial statements of advanced technologies. Now, last time, we started computing for these measures. Okay, we started computing for NOWC, which is net operating working capital. And we said that net operating working capital follows through from the measures of working capital. By way of review, guys, we said that working capital is usually equal to your current assets, although in some books, in some references, I see working capital as defined as current assets minus current liabilities. But for our purposes, we're going to follow the usual definition that working capital is equal to your current assets, and that your net working capital is a difference between your current assets minus current liabilities. Now, net operating working capital, on the other hand, includes this descriptor operating for both current assets and current liabilities. Now, we said last time that when we deal with operating current assets, so let me point to the balance sheet. So we have cash. Our current assets here include cash and cash equivalents, short-term investments, accounts receivable, and inventories. We said that of the four, only short-term investments is not part of operating current assets. Had there been prepayments, guys, assuming there was prepayments here, then that would have formed part of operating current assets also. As regards the current assets list, only the short-term investments or marketable securities is not part of your operating current assets. So when we computed for the operating current assets, we only included the cash and cash equivalents, accounts receivable, and inventories. Okay, and we computed for both years 2019 and 2020. On the other hand, for current liabilities, in this case, only accounts payable and accruals are part of operations. Okay, we said that notes payable is interest bearing and it's classified as part of financing. So only accounts payable and accruals are part of your operating current liabilities. So we computed for them for both years 2020 and 2019. Now the difference between your operating current assets and operating current liabilities is your net operating working capital. Okay, then we computed for the total net operating capital or total operating capital. And the formula for that is your NOWC, which we have already computed, plus the net PPE. Now take note, guys, that we're using here the net property, plant, and equipment. We discussed this last time, and we said that the property, plant, and equipment account can be presented in the balance sheet in this form. Okay, you can be given the cost of the PPE, and then we include with it the accumulated depreciation, the contra asset account, to arrive at the net property, plant, and equipment. Okay, so another way to present your PPE is just to show the net PPE. So these are two different ways to present your PPE in the balance sheet, including the cost plus accumulated depreciation, and then with the net PPE or just the net PPE. If it was just in either case, guys, usually there are notes to the financial statements that give the breakdown of the PPE. Usually companies, especially manufacturing companies, do not have only one PPE. They will have several equipment, several machinery, and that should form part of the notes to the financial statements, the breakdown of the equipment or the PPE. Okay, now for TOC, okay, take note, for total operating capital, what we need is a net PPE. So if you're given also the PPE at cost, you have to add to NOWC your net property, plant, and equipment, not the property, plant, and equipment at cost. Okay, so for TOC, total net operating capital for 2020, we just copy the net operating working capital, this one, which we copied from the previous computation, and then we get the net PPE from the balance sheet. Okay, by way of reminder, guys, if you're given both the PPE and the net PPE, get the net PPE to compute for the net operating capital. Okay, so having computed for the TOC for 2020 and 2019, then we can easily now compute for the net investment. Okay, at the beginning of 2020, which is the end of 2019, the company had a total operating capital of 1516.4. At the end of 2020, it grew to 1796. The implication of which is that there was an investment. Okay, the investors added more operating capital for the business. So from at the beginning of the year, it was 1516. At the beginning of 2020, which is the end of 2019, it was 1516, and then at the end of 2020, it was 17996. Therefore, there was an additional 279.8 in terms of total operating capital. Okay, so let me pause there for a while. Any questions so far, guys? Any questions? So this was where our discussion ended, and as I said, the assignment was supposed to be it's a short quiz on the statement of cash flows, but I decided not to do that in respect to the holiday season. So it's going to be due next week, guys, and then I'm going to upload the video on how to create the statement of cash flows for you to follow. All right. Any questions, guys, so far? Clear naman tayo? Okay, thank you so much for your comments. Okay, good. Now let's compute now for the net operating profit after tax. Now this is a very, very important measure. Okay, and in order for us to understand what NOPAT is, we're going to compare it with net income after tax. Okay, so we're comparing the net income after tax for 2020 and the net operating profit after tax for 2020. The NIAT, the net income after tax for 2020, we can easily copy it from the income statement itself. Okay, we find it here, guys. So if we go to the net income after tax, the income statement, we find here the net income after tax. Okay, 137.1. So we just copy what's here in the income statement. We just copy it below. Okay. So our computation starts with EBIT. Our EBIT for 2020 is, okay, this is our EBIT, earnings before tax. There. And our interest, you can copy this down. Oops. So let me just okay, so our EBT, earnings before tax, will be equal to the difference between this one. Our tax rate is, if you recall, guys, 196 times, we can use the tax rate, okay, cell that we used last time, Control Enter. Okay, so therefore our net income after tax is simply this minus this. Okay, and this we will increase the decimal place to be consistent with the figures above. 137.1. Let's check if the net income after tax in the income statement was 137.1. Correct, guys. So that's 137.1. Okay. Now, what's the difference between net income after tax and net operating profit after tax? Now, the difference lies, guys, in the word operating. Okay, so let me use my digital pen. Notice, guys, net operating. Okay, so net, there's this word operating. Okay, net operating profit after tax. Now, if you take note, guys, which item here in the net income after tax is not really operating? If you take a look at the net income after tax, which here is non-operating? The answer, guys, is in interest. Okay, it's interest. This one, guys, is in interest is born out of financial activities. So it's not within the control of operations. So what we're going to do is we're going to compute for the profit, operating profit of the firm by excluding, okay, by excluding interest expense. So it's as if the company did not have any interest expense. We will not charge operations with the interest because it's not part of the operations, right? So we start again with the net income with the EBIT, which is 238.4, and then, okay, since interest is not the role of operations, then we will assume that there's no interest expense. Okay, so that's the difference between the NOPAT and the net income after tax. Okay, we're not going to charge operations with interest expense because it's not in their control. Therefore, our EBT, earnings before tax, will be still the same. Okay, it's 283.8, and then we multiply this by the tax rate times tax. Okay. Therefore, our net operating profit after tax is, so let me increase the, all right. Okay, so that's how we compute for the net operating profit after tax. So we assess now operations based on not the net income after tax, but on the net operating profit after tax. Again, the difference is that we do not charge operations with the interest expense because interest expense is a financing activity. It's the result of a financing activity, and it will be quote unquote unfair to charge operations with something that's outside their control. Okay. All right. So let's analyze this. Notice, guys, that the difference between NIAT and NOPAT is, if I subtract this, it's only 62. Okay? It's only 61.6. Now, we would have thought that the difference would have been 88. Okay? Because 88 was not charged to net operating after tax. However, guys, we discussed this to some degree last time. The use of interest, the use of debt, okay, is a leveraging tool. Because you notice, guys, that the tax payment with the use of interest, with the use of debt, reduces the tax liability of the company. So the difference between this, okay, if you take a look at this, guys, okay. So notice that the use of debt, okay, provides the company with tax savings equal to 26.4 in this case, okay, which is what? Which is, where did we get 26.4? In other words, guys, so let me illustrate that. So we have this interest, which is 88. Okay, it's 88.0. Okay. Now, not all of this, guys, not all of this will redound to the benefit of NOPAT. Okay, not all of that will redound to the benefit of NOPAT. What will only redound to the benefit of NOPAT? It's what? It is, anyone, guys? Because we might think that since we're not charging NOPAT with the interest expense, then the difference between your NOPAT and NIAT should be equal to the interest expense. But we see that it's not 88. It's not the interest expense. It's a figure lower than the interest expense. Okay. So what happened, guys? What happened? It's only what? It's only, okay, it's only 70%. Okay. Why? The 30%, guys, okay, is a reduction because there's tax savings with the use of interest. So if we compute 30% of 88, how much will this be? And 70% of 88, how much will this be? Anyone, guys? I put here 88, 30%, and 70%. So this is 88. I'm going to fix this times 30%. There you go, guys. Okay. So what did I do here? Okay, I broke down the interest expense, okay, into 30%, which is the tax rate, and 70%, which is 1 minus the tax rate. So we notice, guys, that the difference between NOPAT and NIAT is not the whole interest expense, but only 70% of that, because 30% goes to the tax savings for NIAT. Okay, let me pause for a while, guys, and ask you if there are questions, if you want me to repeat the explanation, if it's clear so far. Okay, I'll give you a few seconds. Maybe you're jotting down notes, you're copying. Okay, let me pause for a while. Okay, any questions? Okay, let me put the question another way. Is it clear so far? I would appreciate you answering, guys. Kung clear so far yung discussion natin itong NOPAT and NIAT.
Yes, sir.
Thank you. Thank you. How about the rest, guys? I wish to have responses from more than 20 students. That will be great for me, guys. Feedback is very important for me, because I'd like to know if I'm going too fast or if my pace is just okay. Because as I said before, I think this is not a marathon. Okay, this is a jog in the sense, because we'd like to like to journey and learn the concepts together. And I'll glad to repeat, guys, if you have any questions. Okay, I've got 1/3 responses so far. I hope the others will also comment. Okay, let me wait for the other responses. May questions ba? Okay, my question, difference. Okay, Beyonce, my question. Oh, sige. Okay, let me see the other question. Okay, sige. Thank you for that question, Kirsten, Beyonce, thank you so much. Okay, so we are at this juncture, we would like to see the difference between net income after tax and net operating profit after tax. Now, as the name suggests, guys, net operating profit after tax indicate that it should be purely operations. Okay, we are assessing the performance of operations. When we look at the net income after tax, we notice that we subtract the interest expense to arrive at the net income after tax. Now, the interest expense is a financing activity. It's a result of financing activities. So it will be unfair to operations to subtract interest expense when the truth is they don't have any control over this. So what if finance borrows, let's say, 1 million, and the interest expense here for purposes of example is 1,000. If interest expense was 1,000, then that will totally wipe out the earnings of the firm, right? That's just a very, let's say, exaggerated example. If interest expense in this case was 1,000, and then if we deduct it from the from the EBIT, then we'll have a negative earnings before tax already. And we said that that's quite unfair to deduct it from the operating income, because operations does not control the incurrence of interest expense. So in order to have a fair assessment of the operating performance, we're not going to subtract interest. Okay, notice here, I did not subtract interest, okay, because this is a financing activity. So if we don't subtract interest, then your EBIT will just be the same as your EBT. And then if we reduce it by the tax rate, okay, so 30% times 283, we get 85.1. And then we subtract the earnings before tax by the tax, then we have 198.7. So notice that your NOPAT is higher than your net income after tax. Definitely, because we're not charging operations with the use of interest expense. Okay. And then we ask the question, by how much will NOPAT be greater than net income after tax? Subtracting the two guys, we have 61.6. And we notice that it's not equal to 88. The difference is not equal to the interest expense. Why? Because the tax for net income after tax will be lower. Okay, 58.7 versus 85.1. The difference is 26.4. If you add these two guys, that will be 88. Okay, if you sum this up, that will be 88. And this is the breakdown of the interest expense. So how did we break down the 88 interest expense, guys? We broke it down into two, 30% and then 70%, 30% being the tax rate. Okay, so the difference between NOPAT and NIAT is not the interest expense, but only 70% of the interest expense. Because the 30% of the interest expense goes to tax savings for the net income after tax. If you notice, guys, the tax for net income after tax is lower compared to the tax for NOPAT, 85.1. Okay, so by how much? If we know the interest expense, guys, we will know how much is the difference between the NOPAT and the NIAT. The difference will always be 70%, depending on the tax rate. So it will always be, okay, let me generalize the formula. The difference will always be, it will be 1 minus the tax rate multiplied by the interest. Okay, this is the amount by which your NOPAT will be greater than your NIAT, not the total interest. Because if you see here, guys, we're going to subtract the tax rate. If the tax rate is 30%, then it should only be 70% of the total interest. Okay, I hope that answered your question. Kirsten, Beyonce, did that answer your question?
Thank you, sir.
Okay, thank you. Thank you for the question. That's good. I appreciate that. Any other questions, guys? Okay, sige, good. Thank you. All right. So let's move on, guys. Okay, by way of review lang, guys, NOPAT will always be greater than NIAT. Of course, assuming, guys, that the EBIT is positive. Okay, assuming that there's earnings before interest and taxes. Okay, because if it's negative, then we'll have a different answer. Okay, so interest is 88 here. For NOPAT, there will be no interest. Okay, so the NOPAT will always be greater by compared to the NIAT by the 1 minus tax rate times the interest expense. Okay, so we can compute for the NOPAT, guys, using the shortcut. Okay, so let's copy again the EBIT for 2020. Our EBIT is where's our EBIT? It's here, 283. 0.8. Okay, again. Okay, then we can copy for 2019. Okay, then the tax rate, we know the tax rate is equal to, can just access this. So using 2%. Okay, the tax rate. So how do we compute for NOPAT, guys? Okay, based on this, guys, our NOPAT will be equal to, okay, so it will be equal to your EBIT, guys, and then times, we multiply, we subtract the tax rate to it, and then copy to the right. So for 2020, it was 198.7. Okay, why are we using that formula? If you take a look at this, guys, from the EBIT, you subtract the tax. And that's why it's EBIT times 1 minus tax. We're not subtracting anything from the interest because we are assuming that the operations is not privy or is not in control of the interest expense. So we're not going to charge them with the use of debt with interest expense. All right. So for 2020, the NOPAT was 198.7. For 2019, it was 184.1. Okay. All right. So, tax rate depends. So thank you for Michael for the question. We use the current corporate tax rate in the Philippines. So that's, of course, that's dictated upon by BIR. Okay. For several years before, it was 35%, but there were changes as far as the tax rate is concerned. So currently, if I'm not mistaken, it's 30%. Okay. So we just follow the current corporate tax rate in the Philippines now. Okay. Thank you, Michael, for that question. Did that answer your question? Oh, given any situation, no. Kasi may iba't ibang tax rate for, let's say, estate tax, donor's tax, okay, final tax. There are different taxes. The 30% is a corporate income tax. Okay, so different taxes have different rates. For example, donor's tax, iba yung tax rate nun. Estate tax, iba rin yung tax rate nun. This is corporate income tax now. Okay, and if you are interested in the other tax rate, you can easily get that from I think any site of BIR. Maraming references that we can use. Okay, but for our purposes, we're just using the corporate income tax. All right. So let's now go to free cash flow, guys. Free cash flow. What's free cash flow? Okay, let's define free cash flow. I'm going to write here free cash flow. What's free cash flow? Free cash flow is, this is cash flow available for distribution to investors after deducting cash flow requirements for operations. Okay, so this is the definition, guys, of free cash flow. So free cash flow is cash flow available for distribution to okay, free cash flow is cash flow. Let me use a darker color. Okay. Cash flow available for distribution to investors after deducting cash flow requirements for operations. Okay, so what's done here, guys, is that you have your cash flow, net cash flow, and then you subtract what are the cash flow, what are the requirements, cash flow requirements for operations, okay, and then how much should be distributed to investors. When we say investors, remember, this include creditors and shareholders, right? So these are our investors. Okay. So based on this definition, let's now define what are the uses of free cash flow. Where do we use free cash flow? As defined, guys, it's available for the cash flow available for distribution to investors. Again, when we say investors, creditors, and shareholders. Okay, so let's identify five uses of free cash flow. Anyone, guys? Can anyone guess or suggest what are the uses of free cash flow? Take note, it's cash flow to be distributed to investors. Investors being creditors and shareholders. So any suggestion? Yes?
Sir.
Yes. Who's this?
Sarmiento, sir.
Okay, Carlo? Sige.
Paying interest.
Yes, correct. Thank you, Carlo. Yes. Kasi distribution to investors, no? And who are the investors? Creditors, diba? So what do we pay creditors for? You're correct. Payment of interest. That's right. No? So this is payment of interest. That's one use of free cash flow. Okay, thank you, Carlo. Correct. Okay. Any other suggestion, guys?
Sir.
Yes. Please introduce yourself. Beyonce, yes.
Flora, sir. Paying dividends to shareholders.
Okay, so let's put that under number 3. Thank you, Beyonce. You're correct. Okay, distribution of dividends. Okay. All right.
Sir, Michael.
Michael, yes, Michael.
Repaying debt.
Sorry?
Repaying debt.
Repayment of debt. Okay, so let's put that here. Payment of principal, right? Payment of principal. Am I correct, Michael? Were you referring to that? Debt means the
Yes,
principal
sir.
amount, okay? Because we already identified the interest payments. Okay, and then we also have payment of principals. Okay, so what else, guys?
Sir,
Yes.
this is Joanna po.
Yes, Joanna?
Reinvestment in the company.
Okay, reinvestment in the company. Okay, we can put that as, kasi yung reinvestment as far as the cash flow requirements for operations is concerned, that should not be part of cash flow. But maybe Joanna is trying to say here, investment in non-operating assets, no?
Yes, sir.
Thank you, Joanna. You're correct, no? Kasi yung sa as far as reinvesting in the company, as far as operating assets is concerned, okay, nauuna yon, no? What remains, guys, after we deduct cash flow requirements for operations is your free cash flow. Okay, so thank you, Joanna. You're correct. And a while ago, who was raising his hand? Sorry, hindi ko na kagad notice. Anyone, guys? How about we have one more? We have looked at the interest of creditors. How about shareholders, guys? Aside from distribution of dividends, what else? We also discussed this before. Okay, yes, Leanne?
Sir, purchasing stocks po.
Purchasing stocks. You're referring to, Robert, is that your answer also?
My answer is like capital appreciation something.
Capital appreciation, that's market force, you know, that happens in the marketplace when many would want to buy the share of stock, then the demand becomes very strong, okay, and the supply is just fixed. So capital appreciation is a happening in the marketplace, no? Okay, but thank you, Robert, for that answer. So siguro what was sorry, ano yung sinabi mo kanina? Who was that who answered a while ago? Sabi, nakalimutan ko kagad, sorry. So it was about investing in stocks. So maybe, okay, okay. Okay, so remember last time, guys, we said that a company has the option to distribute dividends in the form of cash, or the firm can decide to take back or buy back the shares from the shareholders. And I said before that there's a reason for that, which we're going to discuss in the near future. Okay, so these are the 5 uses of your free cash flow. Okay. All right. Given that, guys, let's now compute for the free cash flow. Okay. So how do we compute for the free cash flow? The formula is NOPAT. Okay, so if we know the NOPAT, okay, NOPAT, and then minus the investment in operating capital. Okay, that this is consistent with the definition that we placed here. So let's now copy first the NOPAT for 2020. We have that. NOPAT for 2020 is 198.7. Okay, we just got that from the computation above. And then take note, guys, we said, what's free cash flow? It's cash flow available for distribution to investors after deducting cash flow requirements for operations. Okay, during 2020, what was the cash flow requirements for operations? We can find it here, guys, in the net investment in operating capital. Because at the start of the year, total operating capital was 1516. At the end of the year, it became 1796. There was an increase of 279.8. So this was the investment in operations. Okay, the operating capital for operations, it was 279.8. So we're going to deduct that from the net operating profit after tax. So let's copy that, 279.8. And the difference is simply NOPAT minus how much was invested in operating capital. This one, guys, after deducting cash flow requirements for operations. So we subtract this. Oops, sorry. What happened? Okay. All right, so negative 81. Did I get it correct? NOPAT 198.7. Investment in TOC 279.8. Okay, it's correct. Let me just color code this. There. Okay. Now we have a free cash flow that's negative. Can you check, guys, if we're correct? Tama ba yung NOPAT natin? 198.7 ba? EBIT is 283.8. Let me just double check. EBIT. Yeah, 283.8. That's correct. Okay, so we're correct. Okay, now you notice, guys, that free cash flow is negative. Now, free cash flow is negative. Is that good or bad? That's an important question. Is a negative free cash flow good or bad? Okay, I have a question. How do you check if free cash flow is correct? Thank you, Lian, for your question. The formula. Okay, I said to check if the free cash flow is correct, we use the formula. The formula for free cash flow is our NOPAT minus net investment in operating capital. Okay, our NOPAT for 2020 was 198.7, and our net investment is 279.8. So let me double check. We got this, the net investment in TOC, we got it from row 78. Okay, we computed for this. So that's the reason why we had to compute for the net investment in TOC, because we're going to use this to compute for your free cash flow. Okay, so this is a conceptual question. You have here a free cash flow that's negative. That means that we don't have any free cash flow available for distribution to investors. Now, is this good or bad? Okay, the answer to that question, if this is good or bad, is that this could be good or bad depending on the situation. Okay, now in this case, NOPAT was positive at 198.7 and the net investment was 279.8. It means that the company was heavily investing in its operating capital. Okay, well, guys, at face value, that's very good. Why was the company investing in its operating capital? Because for the year, they needed to support its, let's take a look at sales, for example. If you notice, guys, for 2020, there was increase in sales of 150 million. Okay, so sales was increased tremendously. Okay, and in order to support, guys, to support your sales, definitely there will be an increase in operating capital. So that's why if you take a look at our balance sheet, okay, there was an increase in terms of accounts receivable. From 311, it was 371.2. And also in the inventories from 415 up to 615. Okay, yes, also in long-term assets, net plant and equipment 870 up to 1,000. Okay, so it means that the company was investing in its operating capital in order to support its sales, which is a good thing, guys, which is a good thing. In that regard, the increase in the operating capital, 279.8, was a good thing because it needed to support its sales of the current year and perhaps also sales in the future. Okay, so the company generated a positive NOPAT, 198.7. Okay, but that was not enough in order to cover for the net investment in TOC. Okay, so in this regard, guys, FCF was good because it was born out of the increase in investment in operating capital. When a company invests more in its operating capital, then that's a signal that the company looks forward to greater sales in the future, greater revenues in the future. Now, had it been because let's suppose the NOPAT was already negative. If the NOPAT was negative, okay, then that could mean a bad free cash flow. How can the NOPAT be negative, guys? The NOPAT will be negative if the EBIT itself was negative. Okay, so let me repeat that, guys. The NOPAT will be negative if in the first place your operating profit was already negative. So where did our operating profit come from? Let's take a look at our income statement. Okay, go back here, guys. Okay, here, EBIT. Okay, let's suppose when will EBIT be negative? EBIT will be negative, guys, if the operating costs, was more than the sales. Okay, so you have operating costs excluding depreciation and amortization. You have depreciation and amortization. Okay, so the total operating cost is 2,616 plus 100, that's 2,716. So the sales was 3,000 less total operating cost of 2,716. Then you have a positive EBIT. If the sales revenues was not enough to cover for your operating costs, then that will mean that your EBIT will be negative. So a negative EBIT will definitely result into a negative free cash flow. Okay, so if the negative free cash flow, guys, was due to a poor operating performance in terms of EBIT, then that means that the negative free cash flow was bad, guys. Okay? Negative free cash flow, bad siya kasi nanggaling yung negative free cash flow dun sa pangit na na NOPAT. Okay? I hope that's clear. In this case, guys, okay naman yung NOPAT natin. Okay, positive yung EBIT natin. Okay, our EBIT was more, means that our sales was more than enough to cover our operating costs. No? Okay, naging negative lang yung free cash flow natin. Our free cash flow was negative because it was borne out by the company investing in operating assets. And we need operating assets, guys, in order to support sales. Okay, so let me pause for a while. I think there's a question. Ed, you have a question, Ed?
Sir,
Yes.
hello, can you hear me po?
Yeah, I can hear you, Ed. Thank you.
So in this example, sir, since they invested in the following year. So more of short-term investment siya, but over time it will parang flatten out
Uh,
kasi they invested in the operations naman.
Yeah,
Tama ba,
oo,
sir?
correct. Let me clarify that. It's not only short-term investment, Ed, kasi if you take a look at the balance sheet, okay. First, let's take a look at the TOC, total operating capital. Where do we get TOC? Total operating capital is a combination of your current assets, okay, and your long-term assets. If you take a look at 2020, okay, and compare to 2019, you notice that the company was investing heavily in both current assets, operating current assets, and also long-term assets in the form of PPE. Okay, from 870, this became 1,000, which is actually 1 billion. Okay, so there was a huge investment in PPE. So the company was investing in their equipment, in their machinery. And what's the signal for that? The company does that because they know that they will be needing enhanced equipment, enhanced machinery in order to support their their future sales. Okay, so that's a signal that the company sees that there will be greater sales in the future. So this is a good indicator, guys. So not only is the company investing heavily on their current assets, operating current assets, which includes receivables. Okay, that means that they're generating more sales, no? And also their property, plant, and equipment. See, from 870 it increased to 1,000. Okay, that's why, guys, we said that TOC increased by 279.8, which is a good indicator. The company is supporting its future operations. Okay, and because of the high TOC, even more than the NOPAT, you have a free cash flow that's negative. So a negative free cash flow, guys, it can either be good or bad. It depends on the situation. In this case, we say that the negative free cash flow is a good indicator for the company because it was born out of the heavy investment in its operating current assets and its long-term assets. Okay, and also because we can say that there was a, in fact, its NOPAT increased, its operating profit increased over time. 184 in 2019, 198.7 in 2020. Let's see how many percent it increased. So 2019 divided by 2020 minus 1, okay, it gives us a, sorry. It's 2020 divided by 2019 minus 1. So NOPAT grew by around 8%. Okay, there was a growth of around 8% as far as the net operating profit is concerned. Okay, and how about the assets? The assets, guys, the operating assets, the current divided by the previous minus 1. Okay. Okay, so its current assets, no, its operating capital increased by 18%. Okay, so the increase in operating profit, okay, there was a greater increase in the operating capital compared to the increase in operating profit. 7.9% increase in operating profit as compared to 18% increase in operating capital. This is a signal, as I mentioned a while ago, this is a signal that the company is foreseeing greater, maybe an increase in market share in the future or potential for growth in the future. That's why we can see that they were investing in their assets. Okay, did that answer your question, guys? Clear ba so far? Okay, very interesting tong concept na to, guys. No? Are we clear so far?
Yes, sir. Thank you.
Thank you. So in answer again to the question, how do you check if free cash flow is correct, use the formula correctly. No? I was double checking it because I might have copied the wrong figure, but it's correct as we checked already. Okay. All right. Then we go to a very important measure, ROIC. Okay. So we now ask the question, did the company, did the operations, did management provide value, increase the value of the shareholders? That's a very valid question. So how do we answer that? We have been talking about creating value for the shareholders, optimizing the value of the shareholders, optimizing market price, okay, of the shareholders. And what measure can we use in order to answer that? Okay, one measure that we can use is ROIC, return on invested capital. Okay, and the formula is this one. This is the formula. It's your net operating profit after tax, your NOPAT, divided by TOC beginning capital. Okay, let me explain the formula. Okay, so let's start with so January 1, 2020. So at the beginning of the year, how much was total operating capital given to the company? We have that, guys. TOC 2020. We have it here online. Okay, row 70, guys. TOC for 2019 is 1516.4. 1516.4. Okay, so 16.4. Okay. So at the beginning of 2020, management was provided by this amount of operating capital. And of course, these are in millions, so we know that the management was provided with 1,516.4. Okay. Now we're going to use this, guys, as a measure. We're not going to use the December 31, okay, 2020. The December 31, 2020 figure is 1796.2. So that's the end of the year. 1796.2. 1796.2. So we're talking of TOC, okay, total operating capital. Okay, so the story is this. At the beginning of the year, we're telling management, okay, we provide you at the beginning of the year 1516.4 TOC. Ito, sige, ito sa ending na kasi ito 1796. So we will just base our assessment on the beginning capital. Okay? So you're provided with 1516.4 operating capital. Take note, operating capital to we removed the capital related to financing. Okay? Now, operating capital, okay, and then we're going to use now operating profit. So make sense, guys. Operating capital provided, how much operating profit was generated. So that's why we're going to use NOPAT. Okay, NOPAT. NOPAT was how much? NOPAT for 2020, for the whole year, how much operating profit was generated? Here, 198.7. Okay, 198.7. Okay, so 198.7. Okay, this was the figure generated, operating profit. How much capital was given to the company at the beginning of the year? 1516.4. Sige, tingnan nga natin, yung binigay na return na, yung binigay na capital na to 1516 operating capital, how much operating profit did they generate? So that question, guys, is answered by the measure called ROIC, return on invested capital, where we are getting the ratio of how much operating profit was generated given the beginning capital, the total operating capital at the beginning. So let's do that. So this is equal to, our NOPAT was 198.7. Okay, the beginning capital is, let's get it from row Okay, row this one. Row 70, 1516.4. Okay. Therefore, ROIC is equal to this divided by this. Okay. So we have this answer, guys. Return on invested capital was 13.10%. Okay. Question. Did management create value or destroy value for the company? Was value created or value destroyed? There are only two options, guys. Either creation of value or destruction of value. Let me take that. Was value created? Was there value creation? Or there was value destruction? Based on an ROIC of 13.10%. Okay, what's the answer to that, guys? Kasi 13.10 was value created or value destroyed? Okay. Okay, thank you, Ed. Why? You said value created. Why? Why was value created? Why was value created? Okay, positive ROIC. Okay, thank you, Ed, for volunteering your answer. Okay, partly true, no? Partly true na positive yung ROIC. Pwede ba maging negative yung ROIC? Guys, pwede? Yes, pwede. Now, TOC, guys, laging positive yan. Ha? Hindi pa pwede maging operating capital na negative. Pero yung NOPAT, pwede maging negative. Pwede maging negative yung operating profit. So in that case, guys, if NOPAT is negative, then ROIC would be negative, then that means value was destroyed. Okay, definitely if it's negative. However, guys, that will not be the complete answer. The complete answer is, yes, Leon, you were raising your hand.
Sir, could we check if the ROIC has created value if we compare it, if it's greater than what?
Yes, okay, that's the answer, no? As you say, as seen here, guys, okay. Thank you, Leon. The answer to the question was value created is by comparing the ROIC with the weighted average cost of capital. Okay, so here we're given, guys, that in row 28, the WACC is equal to 8%. Okay, so as to the question, was value created? Yes, value was created because just like IRR, guys, we compare it with the WACC. So is ROIC compared with WACC. So since the return on invested capital was 13.10 and the WACC is 8%, then we say that that value was created for the company. Okay, so that's how we answered that question. Value was created for the company because of the value of your ROIC, which is greater than the weighted average cost of capital. Okay, so we have this ROIC. Okay, we also have two other measures. Okay, we have MVA and EVA. Okay, so let's take a look at MVA, market value added, and EVA, economic value added. Okay, so let me answer that question based on ROIC. Was value created? Yes, since ROIC is greater than okay. So quick review, guys. ROIC is 13.10, WACC is 8%. Therefore, value was created for management because ROIC was greater than WACC. Okay, so next, guys, we go to market value added. So we have used one measure, ROIC. There are two other measures that we're going to learn now. Market value added. Okay, so this is also a very important measure. And economic value added. If you read the text, guys, you would have already met market value added. Okay, so how do we compute for market value added? Take a look at the formula. Market value added is computed by comparing the market value. So how much is the stock price now compared, multiplied by the number of shares? That will be the market value of the stock. No? And then we subtract it with the book value, the total common equity in the balance sheet. The difference between that is called your market value added, MVA. Okay, so let's compute for this. How much was stock price for at the end of 2020? The stock was selling at 65 pesos per share. Okay, how many shares were okay, so let's see. So dapat, guys, sorry, this should also be in please change this. It should also be in millions, no? To be consistent, kasi yung ang figures natin in millions. So this is typographical error. This should be in millions to be consistent with our data. Okay. So our data is in millions. Everything should be in millions. Okay. So how much was our let's kindly insert a line here, guys. Insert. So how much was market value? How much was market value of the stock? Market value is computed by multiplying the number of shares with the stock price. Okay, so this is the market value. And then we're going to subtract and compare it with the book value. So how much is the book value, guys? We take a look at the balance sheet here. Total common equity. Okay, total common equity for 2020, it's 940. There, 2020, guys, total common equity, which includes your common stock plus your retained earnings. So this gives us, all right? Okay. So this should have been millions dun sa taas, no? So this should have been okay. This is thousands, guys. My apologies. Okay. I think this is in thousands. So we should convert this in millions. So to be in millions, it should be 15 divided by 1,000. Okay, apologies for this, guys. Okay. Let me correct, guys, what I did a while ago. Okay, a while ago, guys, it said that this is in thousands. So this is correct. This is in thousands. However, we have to convert this to be in millions. Why do we have to convert this in millions, guys? Because our data are all in millions. Okay, so in millions. Okay, so to be consistent, guys, if this is in thousands, to convert it into millions, we have to divide this by 1,000. Okay, to convert in thousands into in millions. Okay, so we can now use this, the number of shares in millions. So let's put this in millions. In millions is 15 million shares. Okay, therefore the market value, which is in millions also, is 975, which we just multiplied the two. And then the book value is 940. Okay, That's the, sorry for the correction a while ago. Okay, and therefore the market value added is 975 minus 940. Okay, let me pause for a while, guys. And there's a question here. Okay, sige, let me let me explain. Okay, a while ago, guys, this was stated in thousands. Okay, my apologies, guys, for not converting this into millions. Take note that our data is in millions. Millions of pesos yung data natin. So everything here should be in millions just to be consistent. Okay, now we have number of shares which is in thousands. So we cannot use this because this is in thousands. So we have to convert this to be in millions. So how did we convert this in thousands to be in millions? We have to divide this by 1,000 in order to convert the 15,000 to be 15 in millions. Okay, pause for a while, guys. Is there any questions about that, guys? So you might be confused with what we did here. I'll pause for a while. Any questions?
Sir, how did we get market value?
Yeah, this. Okay. So, sige, I'll answer that question. Ito muna, guys. No? Any question as to how we converted the 15,000 thousands no, into just 15? The number of shares given here is in thousands. Therefore, we have to convert this into millions because our data is all in millions. Okay, so the 15,000, which is in thousands, we converted it into in millions by dividing it by 1,000. Okay. May I have your comment, guys? If that was clear, kindly chat yes. If it was clear, guys. I hope I have many responses. So we have to be careful, guys, especially if the data is presented not in its actual equivalent, but rather either in thousands or in millions. So we have to be very careful with that. Okay, thank you. Okay, I think everyone saying that it's clear. All right. So the stock price is given at 65 pesos per share. Now, how many shares are there in millions? So you have 15 million shares. To compute for the market value, or what we call the market capitalization, so this is also called the market capitalization, Market value or market capitalization. Well, we just multiply the number of shares with the market value, with the stock price. So that's 65 times 15 million shares. Okay, so that will be your market capitalization or market value. Okay, let me pause for a while again, guys. Do you have any questions as far as the market capitalization or market value is concerned? Any clarification? Okay, Carlo, thank you for that question. How did we get the total common equity? Okay, so sige, I'll answer that question after we entertain questions about market capitalization. Okay, any questions, guys, for market capitalization? We just multiplied, let me flash the formula. We just multiplied the stock price with the number of shares. So that's how you compute, guys, for the market capitalization or market value. You just look at the, and this can be obtained, guys, by getting the, especially for companies that are listed in the stock exchange. You just get how much is the value of the stock now being traded on a particular time, date. And then you multiply it by the number of shares of the company. So that's how you get the market capitalization. Okay, and then we will compare this with the book value of the total common equity. This one will come from your balance sheet. So let's go to our balance sheet here. How much is common equity in the balance sheet for 2020? Okay, so the total common equity here consists of your common stock plus your retained earnings, the sum of which will give you your total common equity. So we're picking it up here from the balance sheet. This is the book value of your common equity. So that's 940. Okay, so we just linked this one, F44, to your common equity. So this is our total common equity. So we compare, guys, how much is the, in the market, how much is our market capitalization, which is the stock price multiplied by the number of shares. And let's compare it with the book value. In the balance sheet, how much is your quote-unquote market capitalization or book value of your equity? And it happened that the book value is 940, but the market value is 975. So how much was added relative to the book value? The market value is 975, the book value is 940. That means that management has been adding value to the equity. Okay, and that's 35. So, and for MBA, guys, if it's positive, then the performance is okay. It means that the current market price is higher than the book value. Okay, so the higher the MBA is, the better the performance is. Okay, so what you can do with this is, let's say, you compare MBA of different companies in an industry. The higher the MBA, the higher should be the greater should be the performance of that company relative to the other companies. Okay. Okay, pause for a while, guys. Any questions? Okay, pakichat na lang, guys, please, if it's clear. Carlo, did that answer your question, Carlo? Okay, thank you. How about the rest, guys? Thank you, Carlo. Thank you for the question also, and thank you for responding. Okay, good. Good, guys. Please don't be ashamed, guys, or to ask questions. Again, sabi natin, in our environment here, this is a safe environment. You can ask any question related to the lesson. Okay, thank you. Thank you so much for participating in the responses. Okay, so far, guys, we have looked at ROIC, return on invested capital, which is computed by, we have to know the NOPAT, and we have to know the total operating capital, and we're going to use the beginning capital and not the ending capital. Okay? Because the operating capital, the operating performance, guys, starts at January 1 up to the ending December 31. So it's one period. Okay? What others would do is to get the average of the TOC beginning and the ending, and then get the average. But if you recall, guys, in the material that we have in Canvas, I asked you to read a particular article, and that explains, guys, why it's better to use the beginning value and not the ending value, and not even the average. Okay, so I hope you read that, guys. When we go to the other ratios, we're going back to that. Okay, so ROIC, we said that this is the company created value if the ROIC is greater than the weighted average cost of capital. Secondly, MVA tells us that the company created value if the MVA is positive. Because here we're going to compare the market capitalization with the book value of equity. Lastly, guys, we have EVA. We have EVA, which is economic value added. Okay, so we have time, guys, to discuss this. Okay, now the story here is that in the beginning of the year, management was provided this one. Let me see if I can copy this. Control C. Can I copy it here? Let's copy the number. Anyway, 1516.4. So 1516.4. Okay, so this is TOC beginning. Okay, which means that this is on January 1, 2020. Okay. In order to understand EVA, guys, which is a very important measure, okay, we should understand the story. So let's suppose we were the managers, and at the beginning of the year, we as managers were provided with the investors of this amount of money, capital, total operating capital at the beginning. Okay. For the whole period, how much was NOPAT? How much profit did we generate for the firm? So we generated a NOPAT of here 198.7. NOPAT 198.7. Okay. Now question, was this good or bad? Was this good or bad? Okay. Now we will answer that via the EVA. Okay, what does this tell us? The EVA, guys, tells us that at the beginning of the year, we were provided with this capital 1516.4. Now take note that this is not free. This capital is not free. Who provided this? This was provided by investors, right? Investors provided this 1516.4, either investors, we say either creditors or shareholders. They provided this capital. Okay. Now, is this free, guys? This is not free because there's what we call an opportunity cost attached to it. Opportunity cost. Ibig sabihin, guys, ang opportunity cost, the creditors or the shareholders could have placed their money elsewhere and could have earned a greater return. Okay, so the concept is this is not free, means that we're going to charge management for the use of this capital. Okay, we're going to impose a charge on the use of the capital. So we call it a charge on capital. Okay, just like a parang interest, no? We're going to charge management for the use of capital for the opportunity cost. Okay, as I said, who provided this capital, this 1516.4 at the beginning of the year? Investors. Who are these investors? Creditors or shareholders? Now, do they expect return from this? Yes. Okay, so what we're going to do is we're going to charge management for using this capital. And what are we going to charge management with? We're going to use the weighted average cost of capital. Okay, and that's the logical number to use because that's the average cost of the firm. Okay, so if you take a look at this, you notice the formula, guys. It's TOC beginning. Okay, and then we're going to charge it just like an interest. No? So this TOC beginning, 1516.4, we're going to charge management for the use of that with WACC and try to see if the NOPAT is sufficient, okay, in order to create value by comparing it with the charge to the capital. This amount is called the charge on the capital or charge to the capital. So let's compute for that. So this is equal to NOPAT. I'm just going to copy it from here. Where's our NOPAT here? Here. NOPAT. Okay. And okay, why don't we insert something here? Insert pa natin, no? So how much was TOC beginning? And how much is WACC? TOC beginning was 198.7, no? Sorry. TOC beginning was, where's that? TOC 1516.14. Okay. And this is WACC was equal to 8%. Okay, so we're just copying these figures, guys. Percent. Okay. Let me just okay, bottom. So let's call this charge on capital. The charge on capital is the charge on the capital is the TOC at the beginning multiplied by 8%. Okay, so the parang interest, so guys, it's like interest. We are charging management for the use of this capital because this capital is not free. It's not free because there's an opportunity cost attached to it. The shareholders and the creditors could have used the money elsewhere. Therefore, the EVA is the profit, operating profit minus the charge on capital. Okay, there. Okay, it's almost time, guys. So was value created, guys? Was value created for the shareholders? Yes. Value was created because EVA was positive. Okay, so if EVA is positive, then value was created. Now, quickly, guys, another way to compute ROIC, EVA. We compare, guys. We compare ROIC and WACC. Okay, and then the difference, and then we compute for the TOC beginning. So quickly, guys, what was ROIC? ROIC was 13.10, right? So the company generated 13.10 for the use of the capital. What's WACC? WACC is 8%. So the difference between this is this minus this, okay? And then how much capital was at the beginning? This one. Therefore, EVA is equal to, this was earned by, okay, there. All right. Okay, it's already time, guys. Let me just summarize this. So what measures did we use? We used ROIC, we used MVA, and we used EVA. Okay. ROIC means that we were able to create value if it's greater than the WACC. MVA, we were able to create value if the MVA is positive. EVA, value was created if it's positive. If the MVA is positive, then the EVA will also be positive. Then we looked at two ways by which to compute for EVA. Okay, and it gave us the same answer, 77.3. Okay, so let me, so this ends our discussion for today, guys. I'm sorry for the extended time of 2 minutes. So for next meeting, we're going to continue with this. Please practice on this one micro drive. Okay, and whatever we did here, please remove the E here. Okay, so this is not anyway, let's just put here 2021. So whatever we did here for the basic model, please compute for the TOC, etc. please please do it for this second worksheet. All right, so that's what we're going to compare that with let's compare results for next meeting. Okay, and then your cash flow, guys, I'm going to post it later, the video, and this will be due on next Wednesday. You're given 1 week to work, to view the video, to watch the video, and then submit this pro forma by following the video as a short quiz. All right, so thank you so much, guys. Maraming salamat for your patience, and have a great day ahead. Salamat.
Sir,
Yes.
I have a question.
Yes, sure.
How many worksheets do we have to do po?
Isa lang, ito lang. For the cash flow? Or for
Um,
next Monday?
Yes, for next Monday po.
Ito
What's
lang,
that
ito.
po?
Similar to the basic model.
Okay, thank you,
So
sir.
what we did in the basic model, just try to do it here in in this income statement. Okay. And may I suggest, guys, that you kindly rearrange this. Put 2021 first. Okay, because that's usually what we do. You put the most current FS first. Okay, so thank you. Thank you so much a lot, guys, for your
Sir?
patience. Yes, attendance,
Here.
please.
I also have a concern.
Yes,
May I
sige.
stay
What's your-
behind na lang po?
What's your question? Yes.
Sir, may I stay behind na lang po?
Yeah, sure. Sige.
Okay.
The rest of you guys, thank you so much. You may leave. And yung mga magpapacheck na attendance, please remain. Okay, sinong papacheck na attendance?
Thank you, sir.
Thank you.
Thank you, sir.